Good morning everybody, welcome to Stockradar, Stocks on the Move for another year, 2023, leaving behind 2022, which wasn't our best year I would have thought. But anyway, it was capital preservation mode and we did reasonably well on that side of things. We picked up a few stocks along the way to generate a few profits. So I'm down at Bowen Heads at the moment. We've got a bit of warmth this year, which is pretty good, so I'm enjoying the time down here, feeling rejuvenated and reinvigorated for the next year. So hopefully we're going to strike a blow for the bull this year and have a bit more of an active market. And what better way to start than with a breakup by the big Australian. Okay, my name is Richard Lee. I manage the stockradar.com.au website for you. So let's go on for another year. So firstly, with the big Australian, new highs must be managed with every trade, and BHP is no different to any other stock. So let's see what else might be an offer from our scanners for you to track. There's quite a few stocks I looked at last year. We're going to go through a few of those, and I think the mining sector is what I'm going to focus on a bit today. We're having a bit of a run. Inflation's a bit of an interesting situation, so we've got to be careful. But for the moment, we're seeing a bit of levity going on there somewhere, so that's a good thing. So many metals and mining stocks are lurking in the trend intensity neutral zone, and we know that neutral zone is quite an important zone for us, and that's where some of these stocks could launch their trends from. So in a word, its potential is there. So sit tight and hang on for the ride this year. Okay, so firstly, what I want to do is go and have a look at the top 10 trend intensity for you at the moment. So we're looking at a bit of a smattering here. We've got Champion Iron, Proesis, Sandfire Resources, all in the metal sector. Chalice Mining is also in there. So there's some good miners for you. And we've got a smattering of other stocks here. Brickworks, Challengers, recent addition. EBA is doing okay in the health sector. The health sector's been interesting. It's been quite weak. I did review them at the end of last year. Some of those big leaders, Sonic Healthcare, Cochlear, CSL, all doing terribly. But some of the newer ones, Pro Medicus, Polynovo, are starting to levitate a little bit. So we've also got Nufarm in there and Qantas, which keeps surprising us every day. Maybe that's going to be the computer share this year, who knows. And then Super Cheap Auto, or Super Cheap Retail as it's called now, is also starting to move ahead. So we've got some good stocks in there. Just going through our stock pick review, our current open positions are up about 27% at the moment. Annualised basis, okay. We've got Champion, Chalice and Sandfire all in there, which are the ones doing well. And we've got the smattering of industrial materials, diversified finance, a couple of health stocks in there, and transport stocks and a couple of retail stocks. So it's a bit of a smattering there. So we just need to it's stock selection again this year. I am focusing on the mining sector this week, so I'll have a good look at that at the moment. Okay, and this week in trading tactics, I want to start the year off in a good year, a focused year. So patience is a word that I think is really important. One of my members mentioned it to me last year, and it's so true. We really need to be patient, let things happen, and other things flow from that, which I'm going to talk to you about in trading tactics a bit later on. Okay, now, firstly what I want to get to is now the markets. So let's have a look at the Dow Jones. Now, we've been tracking pretty closely to the Dow Jones. The Dow Jones had some interesting stocks in there. Caterpillar, Chevron, Coke, Exxon, J&J, Johnson & Johnson, McDonald's, Merck, all doing really well. And some stocks doing badly. So there are some stocks out there that are doing really well, like our market as well. So we're in a similar situation to the Dow Jones, where we've had a big correction last year. It was a slow erosion, a nasty erosion. Stock picks coming in, getting bumped out again. Some continued up, but it was not all that much fun last year. But we've tracked back up to this high zone here. This is the wall of resistance we've got at the moment. This is the all-time highs up here for the Dow. So we're on track there. We've had a good rally late last year, and we've just pulled back a little bit. So we're just hovering there at the moment. So we'll just wait and see where we're going to go from here. And if we look at the ASX 200, little divergence from my normal format. So this is what we're looking at. Similar picture here. We've had a good correction last year. It's come up. We've hit into that wall area of resistance. So we're sort of in a bit of a I don't know area. The momentum index is neutral, and so that's where that's going at the moment. Okay. So now we'll just go back on track for the other indices, the S&P 500, which we don't always look at, but I thought I'd show today because it's more of a broader index. I mean, our market is really quite a narrow index of 20 stocks basically, so which drives most of it. So the S&P is a broader index. It's not doing so well. It's trying to reverse here. We're in a situation where we might get some push above the average, the downtrend line, a bit of horizontal resistance there. So it's looking interesting. Everything's sort of poised and ready, I think, at the moment. So we'll just have to wait and be a little bit patient, as I said before. Okay, the Nasdaq, well, really doesn't have a lot of influence in our market because we don't have a lot of tech stocks in there. But we're looking at this one again, a bit like the S&P, where we're trying to reverse. It's trying to base out around here above 10,000. We saw some heavy selling late last year, which the market's absorbed pretty well. It didn't push it to new lows, which is a good sign. And we're now going to be looking at, if it does rally a bit, I think it was a bit of a move up last night. Up above here, we've got some resistance here, downtrend line, moving average, and some horizontal resistance, like the S&P 500. So they're the areas to watch for. If we can get a break up there, we may get a correction to that big 36 percentage point move down, 36 percentage move down we saw last year. Okay, so then we go to the commodities. Gold, well, it keeps going up. The US dollar maintains its weakness. Not a lot of volume there, but the momentum and the moving average are good signals there. So gold, you never know, it may get up to R1 above 2,000 in the US dollar. So we'll have to, we just follow that higher at the moment. It's going okay. So we've actually added a new gold stock in there, I think a week or two ago. We hold Proesis, so we're getting a little bit of benefit from that gold price. Copper, again, it's starting to move again higher, slowly but steadily. It's jumping higher. It's got through a little bit of resistance here. We're jetting higher. We've got a bit of holiday lapse in everything across stocks, commodities, everything's a bit of a holiday lapse in volume, so it's a bit hard to read too much, but we do have a lot of resistance up here for copper. 3 times we tried to get through this 470, 490 area and failed, and we saw this big correction back. Now it's back having another shot. We had some reasonable volume, kick a few points higher late last year. So, promising. The trend is up, so let's just follow it from here. And it's moving towards this resistance level. Okay, the other one is crude, and it's going down. I know we had a rally last night, but it's still going down. It's in a downtrend phase. After this big corrective move, after this big trending move we had from 2020 to 2022. So we're down at the moment, and the trend remains down here. All signals are down, below the average, lower lows, lower highs, downtrend line, and momentum is also negative. So just stay away from the crudes for the moment. Despite that, we do hold Woodside, which is an interesting situation, and I know the Australian dollar's been quite strong. So anyway, we'll just have to wait and see where this takes us, but for the moment, crude is going down. Okay, so that's what I wanted to show you on the crude market. Just move that up again. So now we're going to go across to, okay, so we looked at the ASX 200, and if we just have a look in here at the current situation, we've got this, we're up 3 to 36 stock picks at the moment, okay, of 183. So not a lot, but we have got a few stocks, and they're generating, as I said, 27% annualised return at the moment, and some stocks are doing quite well at the moment. So 35 stock picks of 162 and 1 ETF of 21 that we have covered. Okay, on the portfolio side of things, the update, conservative portfolio is 4 out of 20, so we did lose one in the last couple of weeks. And so it's reflecting the 35 out of 162, that sort of just a core amount of stock picks that are going up that we're following at the moment. But that core gives us a full energised portfolio because we follow those trending stocks. We focus on the stock picks for the energiser portfolios. So we've got 5 out of 5 for the 5 stock and 10 out of 10 for the 10 stock, and they're both doing quite well as far as their capital annual growth rates are concerned. Okay, so that's the portfolio update. Now I think we should get into some stocks and have a look. Now, as far as stocks go, we looked at some downtrodden stocks last year, spent quite a bit of time. Domino's, Insignia, some of the leaders, Wesfarmers, Macquarie, Fisher & Paykel, Telstra, CSL, Cochlear, Sonic Health, JBH, Transurban. There's lots of them. Lendlease, ASX, Coles, Wow, Woolworths, I should say. James Hardie, even Seek, RIA are all struggling, and on the property side, GMG and Mirvac. So there's a whole heap of stocks that are really not doing very well at all. And so we're on alert for members, keeping an eye on some of these stocks for you, because when they do trade, we do know when markets come back, when stocks come back, they always provide an opportunity. So we've just got to get ready for that opportunity when they do start to turn, because we don't actually know how far they're going to go down. Some of them are showing support, but we'll keep an eye on them for you and let you know when they're going to trigger off. Current exciting trends we do have in that small pool of 36 stocks. We've got Qantas in there, Brickworks, Sandfire, a lot of these stocks were in the top 10. Ansell starting to lift again, Technology One, TWE, A2M's doing pretty well, Mineral Resources a good one, New Farm, and the other two, Champion Iron and Chalice, so they're doing well. We've got 3 new stocks we've just added, one of which is EBO, which I showed you last week, a health stock, and we've got a couple of other ones we've just added in the last couple of weeks, a couple of really good stocks. We've got a couple of breakouts, and I'm going to focus on one today. We've also on target stocks like BHP, Fortescue are starting to levitate a little bit and looking pretty interesting. So, and BHP's actually made new highs this week. Whether it holds it or not, we'll have to wait and see. So there's some exciting stuff out there. We just need to focus on the ones that we really want to look at. Okay, so let's go through a few stocks today. I'm going to throw through. I try and cover a couple of leaders each week. And I know we did cover Wesfarmers last year, but again, I want to have a look at this one again. You know, we've really got this trend reversal action happening here, high lows, resistance point, and that's the trigger for a trend reversal. So are we building towards a break? Possibly. We're just hovering around the moving average. The volume has been heavy on the downside, but it hasn't pushed it to new lows, which is a good sign, which means there is some buyers out there absorbing some of these sellings, which is really good. And momentum has returned back to neutral zone. So the wheels are turning on Wesfarmers. This is one of those stocks well down, 38% down this year. So we're getting an opportunity possibly coming up for Wesfarmers shortly. Trend intensity is still rating -4, so it's just about to move into the neutral zone, but we'll have to wait and see whether it does that. Again, what I try and do, I try and keep things very simple for you. I look at certain things, and that's what I use to define my trades. And I don't use all sorts of different things to try and input and make a confused picture. I just use some simple things. So it's analysis in for me and money management out. Okay, so analysis in means the trend's got to be turning up. It's got to be above the average. Volume's got to be good or hopefully expanding, and momentum also positive. Now, they don't all have to happen. What they have to do is give me a weight of evidence, which is what my trend intensity does. It gives me a weight of evidence as to what these things are doing. Once I'm in a trade, it becomes purely a function of money management as to where my stop is, and my stop trails behind any trend. Okay, so that's just a quick breakdown of how I'm going to do, just to keep you focused for the year. I really want to try and keep this video clear and simple for you, to try and keep all those confusing things that we look at sometimes, and how we can get embroiled in things as the year goes on, and just try and keep a simple picture for you. So Wesfarmers, I think, is an interesting one worth watching. Woolworths is another one. Now, it's still got a very weak trend intensity rating of -7. Which we can see here, but I'm just looking at this stock here, and I did talk a bit about it last year. We've got the all-time highs up here, up around $43, so we're well off those at 32. But we look at these lows down here between sort of 33 and 32, 1, 2, 3, 4 sort of lows we've got here, and we also got some heavy volume, which did push these moves down. Now, the market hasn't gone any lower since probably, start of 2022. So really it's been quite a while. It's been sitting at this area here around 33, 32 and holding quite nicely. So the price action is probably, I would say, constructive at the moment. Trend intensity rating is not quite there because it's below the average. Momentum is still weak, and volume is really not showing us anything. We've got this holiday period at the moment, which makes it a bit more difficult, but they can turn. So we'll wait and watch them, what they are. So Woolworths, to me, we are getting into that zone. I just need, for me, buying weakness traders might be looking to buy it at the moment, but for me, I need evidence of a turn before I'm going to jump on it, because I need evidence of a trend occurring. So Woolworths, again, an interesting picture. Price action looks interesting. Trend intensity is not on board yet. Okay, now let's go through a few of the miners that I promised you, because I think that's where the value is at the moment. And that's what that's where we're making some money. So Sandfire is one. Had a good day yesterday, this week. We had a sharp rally off here. We had some very good volume. Momentum is very bullish. It's just one of those stocks that says yes, yes, yes. And we've got trend intensity rating of 10. So whether it gets to R1 or not, I don't know, but I will follow this trend with my stop loss. It's above the average. All these things are looking very good at the moment. So Sandfire, it's attracted attention. Is it a takeover target? I don't know, but certainly a lot of these stocks can be when the markets start to rally and miners get interested in taking over other businesses and merging them. So Lycos Minerals, a great stock, and BHP decided that was a time to move on that one. So Sandfire looking pretty good at the moment and rallying pretty well. Mineral Resources, I like this one. It can be a bit volatile, which is a difficult one, but we've had a huge move up since 2020 when it was down around $20, below $20. It's now up around $90 and still doing well. So we just had this recent breakout not long ago above about $65, and we've got a nice little new high here, and it's been rallying pretty well. We've actually had a nice little pullback there, nothing too concerning. Momentum is very good, it's above the average, the trend is up, volume's a bit indifferent at the moment. It generally is with Mineral Resources, so it's a bit hard to read, but trend intensity rating overall is +8, and that's a very good rating, so that's a very positive thing for Mineral Resources. So that one is doing pretty well. Okay, the other ones I'm going to look at, which I said before, was Champion Iron. Iron ore's on the up and up. Now, Champion Iron's had a good rally since it broke up here, and we're doing nicely on this stock. However, it has got to the high point, and this is always a resistance level to respect. Okay, so if it goes through, well and good. If it doesn't, we've got to be careful now. We've got two previous highs here, and it came back pretty sharply both times. So we've got to make sure our stop is tightened and make sure we protect what we've got here. So we've got a good profit here. We want to make sure we protect that profit. And don't fall in love with the stock just because it's a mining stock with iron ore and we get very excited about it. It's all about taking profits and making money, and that's what we've got to do here. So despite it looking excellent at the moment, we just to be careful. Trend intensity rating is 10. And as of the end of last week, when it was just broken through there, we've had a bit of a pullback earlier this week, but it looks okay still, nothing untoward at the moment. The other one is Chalice Mining. Again, it's also moved higher. It broke up a nice little trend reversal down here. We can see a downtrend, accumulation phase here, and now we're moving into an uptrend phase. Okay, so it all looks pretty good here. We've got some nice, we've got a nice little break up here with some very, very good volume, kicking this one higher, and now momentum's got on board a little bit later on. So this one here, it's in an uptrend. Who knows how high it goes, but one is a potential target up around $10, and the stock will just trail this price higher as it goes higher. As we know, these miners can move. So that's Chalice Mining, which is also another one looking good for you. Now, what I did want to show you was South 32, which has just broken out this week, or trying to break out this week. We've got to wait for confirmation for the week before we're sure. But I just really wanted to show you this stock. We had a huge trend from late 2020. We had a nice little trend reversal. It then rallied from around about $2 to about just above $5, which is a fantastic move for us. And it didn't really have any corrections hardly at all on the way up there. It just moved up there until we got into here. Then we got out of this one. Now, it's since then had a nice 50% correction of this upward move. Come right back to this 50% point. Has found support here and is now forming a trend reversal pattern. So again, we've got this uptrend, distribution pattern at the top, downtrend, and now we're getting an accumulation phase again. And are we moving back to uptrend? Well, the miners are starting to get bullish again, so why not? And we've got some nice volume here, some healthy two-way volume here, which is good, but the buyers seem to be winning out as the price is going higher. So at the moment, trend intensity rating is -1 as of last week. So if this kicks higher here this week and we get a confirmed trend reversal here, we are above the average, volume is pretty good, and this is just starting to turn positive. We may well get quite a good rating next week for South 32. So that's one for you to watch and keep an eye on, because it looks quite a good chart to me. Now, moving to another sector, just for a little change of pace, is Webjet. Now, we've had a few interesting events in the travel sector for a while, and Qantas has moved off quite well, and now we're starting to see this stock here, which is Webjet. It's been trading in a range since late 2020 between about 470 and up here around about 660, 670, okay? So we're now moving towards the top of this range. We've had some very good volume here. If I just squeeze this back up a little bit, you can see the volume here is actually looking pretty good on this last run up here. So it's a very healthy, strong volume pushing this move up here. I'm not concerned about price levels, I'm concerned about price action. And we know where this stock has come from, a lot higher, so it well could break through here. Trend intensity rating is +3, so it's in the upper end of that neutral zone and looking quite good, because we don't have a break, so we still have a confirmed uptrend. But it's above the average, volume is good, and momentum is also turned positive. All I need is for that level to break, which is up around 660, 670. Okay, so that's Webjet. So that's the stocks I've got for you today. Excuse me. Hope it gives you some sort of idea. There's plenty more stuff happening on Stockradar, so go and have a look at the trading centre, and you can see all those stocks in the neutral zone waiting to move off. So that's something for you to have a look at after you've seen the video. Okay, so now what I want to go through today is trading tactics. It's really, patience is really a very important word. So I want to start the year on the right foot with a single word of wisdom to get your head in the right space to start the year. We always like to start back. We have our New Year's resolutions, and I hope you've made some. And we always want to just have a bit of clarity as to what we're trying to do. It's like setting an objective as to how we want to start the year, and we try and keep our focus most of the year if we can. I keep my focus by watching my trend intensity rating and my rules, and it's very simple. They're not full of exceptions, and they're not full of whole lot of rules. It's just a very simple focus of what I do, and that keeps me on the straight and narrow most of the time. So trying to get started on the right foot this year is a very good thing. And the word is patience. It's really, no, I'm not a Buddhist, but there's merit in their ways. Just being patient, waiting for things to happen, letting it happen is really sort of, it's what we need to do, because we can anticipate, and often when we do anticipate, we make the wrong decisions. We make decisions on the fly because we haven't got a trading plan. There's lots of things we need to do. Patience is a very important thing. And with what I do with trends, I wait for things to turn. I'm patient, I wait. We can get excited about the first move off, which is often a bit of a jumpy move. Then we get a pullback, and then we get despairing, and then we have another move higher. So I just wait for all this sort of stuff to happen until the sentiment swings properly in my favour. So words that flow from patience are things like cool, calm, relaxed, focused, tranquil, serene, controlled, resolute, firm, determined, purposeful, engaged, centered, disciplined. All these words are sort of patience sort of endears you to all these sort of words, and these are really what we need to focus on, the qualities of what a good trader will do when they're trading the markets. Because markets they can drive our emotions into all sorts of corners of the world, which is a very, very difficult thing to manage. And if we have a concentrated, focused trade plan and some things like patience to drive us, focus will help us get through to where we want to get to. So these are the qualities we want to endear in our trading, not things like confusion, anxious, uncontrolled, directionless trading behaviour. All these things cause a huge amount of frustration, and we don't want those things. So we need to make sure we don't put ourselves in positions where we're making decisions on the fly, and we want to make sure that we're clear and focused what we're going to do. If this happens, I do that. If that happens, I do this, and that's how we work. So bring peace and tranquility to your trading by being above all patient. Okay, this will lead you to find all those necessary qualities of control, calm, purpose, and disciplined trading, and focusing on what you do, and that's really important. So this will lead you to find satisfaction and success in your trading. This is all about trading analysis. As I said before, is about 10% of what I do. Money management is a huge part, and managing myself is another big part of what I need to do. Managing my emotions, managing my decision making, being disciplined about what I do, and this will lead you to find satisfaction and success in your trading. So if you do all those things, you actually feel good about yourself, and then you feel good about your trading, and then profits will flow from that. That's how it works pretty well. So you start with yourself, and then you build your trade plan, and you develop from there. So with this background, we can forge ahead with the nitty-gritty of trading stocks, which I will do this year. So try and keep that focus throughout the year if you possibly can. Okay, so BHP, well, I've looked at BHP. We know it's making new highs today. To find out the status of BHP in Stockradar's trading centre, go to Stockradar and have a look at that. It's a very interesting situation, as are a lot of the miners. So keep an eye on BHP. And what we're seeing here is an interesting situation. It's in a trading range, a big trading range. We've seen it between S1 and R1. What does all this mean for the future? Well, as I say, go to Stockradar and have a look at that. And I'll probably be covering that in the newsletter later on this month. Okay, so cool heads make the cool decisions, and that's what we want to do. Okay, all right, so that's about all I've really got for you today. Some of those miners look interesting. There's a smattering of other stocks out there. 2023 is going to be a year of success for you. I know it will be, but make sure you keep your focus and trade well. So what's happening in Stockradar? Well, the newsletter will come out later on this month. We skipped a month last month because I took a break. We'll focus on defensive stocks with an attractive yield and some that are possibly moving from negative to positive. Now, yield is not an objective of mine, but it is a bonus, especially when we've got these stocks that have come back a long way and we're starting to look for turns, and if they do have a bit of yield, it just gives us a little bit of comfort when we're trading these stocks. And also remember, these big stock corrections, whether it's Wesfarmers, Macquarie Bank, Fisher & Paykel, whatever it is, Transurban, all these stocks, when you get these big corrections, they are always opportunities. We just need to make sure we get our timing right on these ones. Okay, so as I say, patience, cool heads make the cool decisions. That's where we're at this year. Okay, stay safe, watch your trends, hedge your stops. Give me a call if you need any help and you want to have a chat about anything. And I'll see you all again for next week's Insights. Thanks very much for listening.